Microsoft is down 6% in after hours trading after the company announced its fourth quarter 2024 results. This is a roughly $200 billion drop to Microsoft's market cap, so it seems like investors are not overly happy with Microsoft's report so far. I went through Microsoft's earnings and I did my best to figure out what is going on with the stock and why it is selling off so hard. And in today's video, I want to share my thoughts with you. Additionally, we will be going through Microsoft's earnings report, its earnings presentation, and answering if the stock is looking like a buy after earnings or if it is still too expensive. Before we get into the video though, I just want to say that I work extremely hard to get these earnings videos out as soon as possible. So if you enjoy or appreciate these videos, then please remember to leave a like on it, as it does really help out my channel. But with that being said, let's now hop into Microsoft's earnings. Alright, so as always, I took some screenshots from Microsoft's earnings report, and I want to go through them really quickly with you. So here we can see that Microsoft's revenue came in at $64.7 billion for the fourth quarter and increased by 15% year over year. Operating income was also $27.9 billion, up 15%. Net income was $22 billion, up 10% year over year. And EPS was also up 10% year over year. Then we can also see that they said, highlighted by record bookings and Microsoft Cloud quarterly revenue of $36.8 billion, up 21% year over year. So overall, it seems like Microsoft's business is still growing quite strong, and pretty much every metric is growing at double-digit growth rates. So far, this earnings report actually looks pretty good. Now, this next screenshot shows us the business highlights for Microsoft. And here we can see that revenue in productivity and business processes was $20.3 billion, up 11% year over year. Office commercial products and cloud services revenue was up 12%. Office consumer products and cloud services revenue was up 3%. LinkedIn revenue was up 10%, and dynamic products and cloud services revenue was up 16%. Then revenue in intelligent cloud was $28.5 billion, which is up 19% year over year. Server products and cloud services revenue increased by 21%, and Azure and other cloud services grew by 29% year over year. So Microsoft Azure is still growing incredibly well, and the overall cloud unit of the business is growing by roughly 20% year over year. Revenue in more personal computing was $15.9 billion, also up 14% year over year. Windows revenue increased by 7%, however, devices revenue decreased by 11% year over year. But Xbox content and services revenue increased by 61%, and search and news advertising revenue, excluding traffic acquisition costs, increased by 19% year over year. So here we can see that basically every single business segment of Microsoft's overall business is actually growing quite well year over year, except for the devices revenue, which again was down 11%. But other than that, every other business unit is growing very well over at Microsoft. Now, this next screenshot shows us the full year results for Microsoft. And here we can see that revenue for the fiscal year of 2024 was $245 billion, which is up 16% year over year. Operating income for the full year was $109.4 billion, up 24% year over year. Net income was $88.1 billion, up 22%, and diluted EPS was also up 22% year over year. So again, all of these key metrics are up by double-digit growth rates, and operating income and net income both grew by over 20% year over year, which is just insane, especially considering the scale of Microsoft's business today. This is a multi-trillion-dollar company growing its business by 20% year over year. It's just insane to me. Now, this next screenshot gives us a nice table here of all of Microsoft's different business segments. And the one that I really want to point out is Azure and other cloud services, which did grow by 29% year over year once again. And overall, if you want to pause the video, you can see all of the key metrics and the growth rates here of all of the different business segments. So then my question is, if Microsoft had such a strong quarter, then why is the stock down 6% in after hours trading? And I believe it's also down roughly 15% from its all-time highs now. Well, I did some digging and I found that Microsoft's cloud revenue slightly missed analyst expectations, just slightly as well. And it seems like this is the main reason why the stock is down in after hours trading, because it seems like the market was pricing in that Microsoft's cloud division was actually going to beat analyst expectations and continue growing extremely well. Now, personally, I also think that Microsoft stock is pricing in a lot of growth right now, but we are going to get into that a little bit later on in the video. But basically, when a business is pricing in so much growth, if it doesn't actually beat analyst expectations and continue growing at these ridiculous growth rates, then the stock can take a pretty hard hit. And again, in my opinion, that is what happened to Microsoft as well. But let's move on to the income statement now. And we've already discussed the revenue and operating income and net income figures, but what we did not discuss so far is the actual shares outstanding for Microsoft. And to my surprise, these shares outstanding of Microsoft did increase by roughly 5 million shares year over year. So Microsoft's overall share count actually did grow year over year, despite the business buying back shares and using profits to buy back shares over the past year as well. Now, if we head over to Microsoft's balance sheet right here, we can see that the company does have cash and cash equivalents of $75.5 billion and total current assets of about $160 billion now. The company also has total assets of $512 billion, so over $500 billion of total assets now. And if we take a look at the company's liabilities now and the current liabilities, we can see that they do have $125 billion of current liabilities and $244 billion of total liabilities. Now, this is a pretty dang strong balance sheet right here because Microsoft does have more current assets than current liabilities. So the company is not in any financial stress or anything like that. And they're also producing tens of billions of dollars in profits in addition to their existing cash position. So obviously Microsoft is not in any financial stress, but I do like to look at the balance sheets very quickly on my channel because sometimes you do notice some pretty funny things or some pretty major red flags. But mainly I am just looking for the business to be financially sound, and Microsoft is financially sound. Now, moving on to the cash flow statement, which is my favorite financial statement, we can see that the operating cash flow did increase to $37.2 billion versus about $29 billion last year for the fourth quarter of the fiscal year. We can also see that Microsoft has now done $118.5 billion in trailing 12 months operating cash flow, which is up from roughly $87.6 billion last year in 2023. So Microsoft's overall operations are continuing to produce a lot more cash flow, and this is growth of over 20% to the operating cash flow year over year. Moving down here, we can see that the additions to property, plant, and equipment were roughly $14 billion in the most recent quarter, versus $9 billion in the same quarter last year. So the capital expenditures for Microsoft did actually grow by roughly 40 to 50% year over year. And overall, this means that the company did produce $23 billion in free cash flow for the fourth quarter of 2024. In Microsoft's fourth quarter of 2023, they did $20 billion in free cash flow. So free cash flow is up roughly 15% year over year. And in the trailing 12 months now, the company has done $74 billion in free cash flow. So this is the amount of free cash flow that Microsoft is currently producing. The company also bought back $4.2 billion worth of shares in the most recent quarter and paid a dividend of about $5.6 billion. So that is where a lot of the company's free cash flow is going. And this is nothing new for Microsoft. They really like to buy back shares and pay a dividend. So that is how the cash flow statement is looking over at Microsoft for this year. So now let's head back over to Stock Unlock really quickly. And I want to find the actual price of Microsoft's business today. So at the market close, this was a $3.11 trillion company. Now, if we multiply this by 0.94 to account for that 6% drop in after hours trading, then it means that Microsoft is currently trading for about a market cap of $2.923 trillion in after hours trading. Now, we also found that the company has done $74 billion of trailing 12 months free cash flow, which means that it is trading for 39.5 times free cash flow today, which in my opinion is a very high price ratio for a $3 trillion company. Like typically I see 40 price multiples on stocks that are growing their revenues by 30 to 40% annually. And Microsoft is not doing that. So in my opinion, Microsoft is actually still overpriced in the market. And a basically 40 price multiple for Microsoft's business, I do think is a significant premium to pay over the actual fundamental value of the business. So let's head over to Stock Unlock's freeform tool here really quickly. And I want to show you something that I found recently that I also thought was kind of interesting. So Microsoft is currently trading for that 40 price to free cash flow today. Well, if we go and take a look at the tech bubble here in the year of 2000, right at the peak of the tech bubble, actually in 1999, Microsoft's price to free cash flow peaked at 52. Now, Microsoft's price to free cash flow is not 52 today, but it is very close. Again, it's around 40 today. And if we actually take a look, even during the tech bubble in the year of 2000, Microsoft stock was trading for a price to free cash flow of about 42. And just recently, when the stock was hitting its all-time highs, its price to free cash flow got all the way up to 48, which is just below the same multiple that Microsoft was trading for literally at the peak of the tech bubble. That is how expensive this stock has become in the market. And what's also interesting is back in the tech bubble, Microsoft was a smaller company with a lot more growth potential and was growing more quickly. Now Microsoft is a multi-trillion-dollar business that is growing its revenues by about 16% year over year, but still, a 48 multiple for 16% revenue growth, in my opinion, is pretty insane. And I do think that this kind of backs up the theory that we are in a little bit of an AI bubble right now, because Microsoft is kind of seen as one of the AI leaders. And I do think that this AI hype has caused Microsoft's stock price to rise at a faster rate than the actual business is growing, and that is how price multiples expand. However, price multiples cannot expand forever, and ultimately what that means is that there is a limit to how far Microsoft's price multiple can actually grow before the business just stops expanding its price at a faster rate than the underlying fundamentals are growing. And when price multiples eventually peak, the future share price returns are significantly lower. And these are the reasons why I was not buying Microsoft stock at these prices and why I am still not interested in the stock. For example, if we take a look at Microsoft's share price compounded annual returns from where it peaked in the year of 2000, then we can see that the share price has only compounded at about 9% annually. Or in other words, the investors who were buying Microsoft stock in the year of 2000 at those 40 plus price multiples only compounded their investment by 9% annually, and it actually took roughly 16 years for them to see a positive return on their investment after the tech bubble collapsed. Now, I am not saying that this AI bubble is going to collapse soon or anything like that, or that Microsoft stock is going to see some sharp correction or 10 years of no returns. I'm just saying that this is what happens when investors pay a significant premium for a business. Paying too high of a price is a real risk in the investment world, and I do think that Microsoft is at the point where, personally, I do believe that its price is way too high. If we also take a look at Microsoft's price to free cash flow and share price over the past decade, we can see that its price to free cash flow has compounded or expanded at a rate of 13% annually. Its stock price has compounded at 26% annually over the past decade, but over half of these share price returns did come from the multiple expanding. So a large portion of Microsoft's stock price returns were actually fueled by the multiple expansion. And again, if Microsoft's multiple expansion stops, then its future returns will not reflect its historical returns over the past decade. And this is my own thesis on this stock going forward. So I just think that investors should be aware of this and also understand where stock price returns come from, because a portion of a stock price's returns, or one of the factors that goes into how much a stock price will return, is its multiple expansion. And again, the majority of Microsoft's returns over the past decade were from multiple expansion, and that simply cannot continue forever. All right, now the last thing that I want to do in this video is head over to Stock Unlock's discounted cash flow calculator and kind of show you guys what the market is currently pricing in for Microsoft stock. So here we are going to project out Microsoft's free cash flow over the next 5 years, and I put in a 15% compounded annual growth rate over the next 5 years to the free cash flow, stock buybacks of about 0.71% annually, which is the company's 5-year average, and a price to free cash flow of 30, which I do still think is a pretty high multiple for this business. Now, with these metrics right here, we get a compounded annual growth rate to the stock of only 8.73%, which is not a market-beating return because historically the S&P 500 has delivered about a 10% annual growth rate. So basically what this calculator is suggesting is that even if Microsoft does end up growing its cash flows by 15% annually and trades for that high multiple of 30, in my opinion, then it still will not produce market-beating returns. Also, if we scroll down, this means that Microsoft would have to produce roughly $150 billion in free cash flow by the year of 2029 versus the $74 billion of free cash flow that they're currently doing. So free cash flow would basically need to double over the next 5 years just for the company to produce around a 9% compounded annual growth rate to its share price. And this right here is what I mean when I say I believe that Microsoft stock is already pricing in a lot of future growth. And I do think that it is important for investors to consider these things, because when I enter in these metrics right here, a 15% annual free cash flow growth rate at a 30 price multiple, which I do think is very optimistic numbers for Microsoft, then I can see that the actual compounded annual growth rate based on my high-end estimates it's just not an attractive return for me. And therefore, I can conclude that for me personally, Microsoft stock is way too expensive, and it is not a stock that I think is looking attractive, even after the share price drop in after-hours trading. Now, to be clear, I do think that Microsoft is an amazing business. I just think that it is way too expensive today. I think that Microsoft is an obvious leader in cloud and AI, but I also think that the market and Microsoft's price today is reflecting that this is the obvious winner of these two major categories. So if there are any disappointments in Microsoft's earnings, even just a little disappointment, then it seems like the market will sell off the stock extremely quickly. It's simply priced for perfection, and therefore, anything less than perfection will lower this company's price. And with that being said, those are my opinions on Microsoft's stock today and the company's earnings. Overall, I do think that it was actually a great earnings report. I just think that Microsoft stock is extremely overvalued today and priced for perfection. So again, anything less than perfection is going to cause the stock to sell off at this point. But again, that is going to wrap up the video for today, everyone. And if you did enjoy this video, then please remember to leave a like on it, as it does really help out my channel, and I do really appreciate it. And also, if you're new here and you want to subscribe to the channel and see more major stock market earnings updates that are coming out over the next couple of weeks, then please make sure to subscribe to the channel, because that would also be pretty awesome. And lastly, thank you all so much for tuning into today's video. I truly do appreciate it, and I really hope to see you all again in my next one.